Good morning, ARMR Insiders. Let's dive in. To our carry trading portfolio. The beauty of the carry trade to me, there's many levels of it, but to me, the unseen beauty is that I go to sleep every night with a third of my capital in treasury bills. This allows me to take risk in ARMR Macro, in ARMR Special, in ARMR Invest. I can take that risk and I can do it aggressively because I know I'm sleeping on treasury bills every single night. You can't imagine the effect that will have on you in the rest of your portfolio. We can make a lot of money trading just the S&P for a couple hours at a time. So what we do is we take a lot of risk for a short window in the S&P only. We use triple the S&P, SPXL. I know guys on our trading desk that when we do this, when I use SPXL, they're trading options and they're making a lot of money at it. So you could trade options with this information. The key here is a lot of risk in a short window, no individual stock risk, just the market risk, following stops aggressively. Let's go to the action yesterday. You're looking at a 3-minute bar chart. Every bar is 3 minutes. We use 1 minute to execute, 3 minutes for the triggers. All the lines that are drawn are an ARMR algorithm called the Price Movement Profiler, the PMP. VWAP is the center of everything, this black dot. The ARMR VWAP, standard deviations above and below. The opening range, Fibonacci extensions above and below. And then, of course, we have the average true range highs and lows that we use. So let's go over this trade. We caught a monster move right off the bottom at 130, and we carried almost all of it to the very close of the market, right at the high. We exited at 358. Okay, let me just break it down for you. You can grab a pen and a piece of paper and write down some of these notes. You can also look at the captain's log and the email that was sent to you with these notes. So remember them. First of all, we have three locations that we trade. We have the morning setup. We have the breaking of the downtrend / consolidation during the day. That's at least an hour long. And then we have the afternoon setup. So there's morning setups, afternoon setups, and the breaking of the downtrend whenever that occurs. Okay. So step one, the morning trade setup. We got in, we got out. We took a small loss in the portfolio to start the day. Okay. So the morning setup didn't work. It reversed immediately. We got out at very tight stop. We don't need wide stops. The trades that work do this. They rip. Trades that don't work, we stop immediately. Our reward is enormous. Our risk is tiny. What happened yesterday was just a beautiful coming together of a whole bunch of our setups at once. And so I'm going to walk you through what this looks like and why we hit it so hard and we rode it all the way to the close instead of booking profits along the way. This allowed us to maximize the gain of this monster trade. Okay. So first of all, we had this sell-off actually that was 2 hours long, this first white line here. 2 hour long sell-off. So we had this first trade and then we have to wait for at least an hour long sell-off. This was 2 hours. The location is the opening range low. It's one of our best locations. Opening range low and the first fib down on the day are the best locations when the risk monitor's green. The market wants to resolve to the upside every day when the risk monitor's green. And our job is to catch that trade. So a pullback to the first standard the opening range low or the first fib down is a key location for us. Then what we do is we look at the prior day's trading and we identify key locations of support. And what you're going to see right here, I'll make this the red line. Okay. Had the market broken below this level, it would have been 100% down day. It would have been ugly. We wouldn't have traded at all. But when it comes to this level, the red line, yesterday, right in here, we highlighted for you the classic ARMR volume reversal trigger. Again, it was a big down day. This case, it stops. Really, the reversal trigger stops at the first fib down on the day. This normally leads to a big rally. A volume reversal trigger normally leads to a big rally, and it did nothing yesterday. We had break-even trade yesterday. But that reversal tells you institutions were stepping up big at that price location. So yesterday, when it comes down to test that location from the prior day and then breaks the downtrend, we know it's game on for a rip higher. Our reward's huge. Our loss would be minimal, which would have been taking out that red line. It would have been over the trade. Our job is to get on the right side of probability when reward is worth risk. It doesn't get any more obvious than that for us. So we hit it with all guns blazing. Then the market runs up to the next downtrend. In many cases, I would have sold some right there at the VWAP, and I shared with you I'm not selling any. Let me give you a quick reason why. Take a look at what treasuries were doing yesterday. Stocks follow bonds in many cases. So you have to look at the interrelationship of markets to help you with trades, okay? This rally in bonds started at 1209, and bonds went to a new high by 1 o'clock. Bonds were at a new high by 1 o'clock. Let's see where equities were at 1 o'clock. At 1 o'clock, equities were trading near the lows of the day. So stocks were still going down, and bonds were screaming higher. That was another indication that when we got to this key location, a breaking of the downtrend was going to release a rip. Don't forget, when the risk monitor's green, every day we're trying to capture the put buyer, the zero-dated put buyer. Anybody that bought puts in the morning, market comes down, they're making some money, they're going to puke out those puts in the afternoon. When they sell the puts, market makers buying puts, buying the underlying, and that's what creates an unbelievable rip. So we know when the risk monitor's green, we're looking for that trade. We want to hit it with all guns blazing, which we did here. We want to ride it, and we don't want to sell anything on the way up when we see treasuries doing this. Treasuries making new highs. And on top of all of that, we had information on the options flow in here. Actually, back in here, when the bonds were ripping higher, we had information on options flow on the S&P that was very bullish. All of that came together to make for a monster trade. And it helps us hold the whole position. We don't sell any at targets. We just keep raising stops. But I want to talk to you about stops for a second. We used the same stop strategy we always used yesterday. And in days where we get a monster trade, it doesn't trip the stop. So the information about bonds, the information about option flow helps us make the decision not to book any profits on the way up. But each time we get to the target, we raise our stops and we raise our stop. And in a ripping market, it won't hit the stops. So that tells you about something when the stops do get hit. Don't be afraid of that. Understand that there's a different market unfolding. Book your profits because there's a high probability that there isn't going to be a massive rip. Yesterday was a massive rip and it just never hit our stop. And we rode it all the way to the close. So the first stop that was hit, that letter A for you right here in that yellow box, we booked some of our gain and then it ripped again to the close. And we just got out at 2 minutes before the close, right near the highs of the day, as we just kept raising stops, boom, 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 until we finally got taken out. Are you ready to join us? Are you ready to carry trade? It's lots of fun. We took that capital out of the market, went to sleep on treasury bills, no risk. It's a wonderful feeling. And then we'll come in today and we'll look for the next setup. It has a profound impact on all the other investing I do because we are maximum long in the macro fund, in the special fund, in the investment fund. And the market's skyrocketing this morning. That whole portfolio is going through the roof. I may not carry trade today. I don't have to. The rest of the portfolio is going through the roof, and I'll collect my interest in treasury bills. Join us on the desk, live, 9:30, looking for carry trades all day. I look forward to seeing you guys there. Have a great trading day, and don't forget, take all this information you're hearing with me or anywhere else, figure out your strategy, think it through, and be the smart money. Have a great day trading.